Good evening. Welcome. We're live here at Hoag Medical Center in Newport Beach. I am grateful that all of you have registered to this webinar. I'm going to try to make it as interesting as possible. My goal today is really to connect with you to be able to do that one-on-one meet either by phone or in person. And with that, we'll start. The topic for today is Roadmap to Medicare Supp plans. My name is Patty Contreras. I'd like to kind of give you some insight of my background as it is relevant and be able to help the clients that I meet with. I've been in the industry for 30 years. I do have experience in corporate banking, commercial REO, insurance, and financial industry. I've been in the industry independently for 15 years. My corporate office is based in Upland, California, and I do have other offices in Newport Beach and Huntington Beach. I am an alumni from UCLA, proudly, and I do have a diverse background, extensive in Social Security, long-term care, disability, Medicare planning, and everything that impacts income. I'm also a wealth planner. I'm an expert in health insurance and save money strategies. I do actually have contracts with school districts in 4 counties in California and other states. I work under a team environment with other business leaders that bring an additional 20 plus years extensive knowledge within the US. I'm also licensed in 11 states: Arkansas, Arizona, California, beautiful Florida, Michigan, Maryland, Nevada, Oregon, South Carolina, Texas, and Washington State. Again, my goal today is to get to know you. When I meet with you, I do an intake, and what that means is I'd like to kind of find out what's important to you as we're designing and figuring out what plan is going to be a better fit for you. I'm also going to be informative so that we're going to go over the overview spectrum of Medicare, Medicare Advantage, and Med Supp plans. So it's a rather in-depth conversation so that you get an in-depth view of what's going to make sense for you. Along that process, I love to educate folks because we are going to be able to see what plan is going to be a better fit for you. And again, I'm holding you through the process so that you're able to choose a plan that is going to be a good fit for you. We're also going to begin the conversation of what's best for you. And with that, we're going to schedule, hopefully, an appointment, whether if it's virtual or in person. And I also always take the opportunity, if I am not able to help you, to ask for referrals. My goal is to help as many people as I come across as I meet everyone virtually and locally. Now, let's start talking about the parts of Medicare. Medicare, as many of you may know, only covers 80%. We have Part A and Part B. Under Part A, we basically focus on coverage for hospital care, mental health care, and that's inpatient, meaning when you are confined in a facility or in a hospital, skilled nursing services, hospice, and some blood transfusions. Part B is more of the ancillary, things like physician services, outpatient hospital services, ambulance, outpatient mental health, labs, durable medical equipment. So for instance, for those folks that use oxygen or a CPAP machine, that's where it's applicable under the DME. Also outpatient physical, occupational, and speech language therapy, and some preventative. Here's what's important. Medicare does have gaps, and like I said earlier, it only covers 80%. So as we look at Medicare, we have to keep in mind that if you stay with original Medicare, you are basically responsible for that 20% out of pocket. And that's why it's always important to look at the other options, the Medicare Advantage and supplemental plans. Today's conversation is focused around supplemental plans. Under inpatient care, if you only have original Medicare, you have a $14.84 deductible that applies within the first 1 to 60 days. And from day 61 to 90, it's $371 per day. And from day 91 to 150, it's $742 per day. and after 151 days, you have no coverage. This is really important. Most people never think that it's going to happen to them, and this is where looking at possibilities and really doing a due diligence and what's going to be a better fit is important. The nursing, the first 1 to 20 days, it's 0 out of pocket, but from day 21 to 100, it's $185.50 per day. What does that mean? That means if you are confined in a nursing rehab facility, from day 21 to 100, that is the amount that you would pay per day. And if you exceed that, that's when you run into issues of not having coverage at all. Medicare does not cover long-term care, so it's a conversation that you'd want to write yourself a side note so that we can further discuss. The premium for Part B is usually $148.50 for 2021. I'm going to also show a slide that is going to be relevant based on your income. The cost per year, $203 per year, that's a deductible, and then 20% for Medicare approved services. Again, this is if you only keep original Medicare. And the most important thing to make a side note is that you don't have an out-of-pocket limit. This is very important, folks. I had a client several years ago that didn't understand what this meant, and within a 3-month period in that year, his out-of-pocket was close to $50,000. So, again, this is something very important that requires additional conversation. The Part B cost, this is important. This slide is relevant so that for those that are watching, you can see based on your income, for instance, if you're an individual file tax return earner that makes $88,000 or less, or if you are married and file joint making $176,000 or less, or if you're married and file separate, the per month for 2021 is $148.50. And again, that amount will increase based on your income. So it's very important to go over this slide. This is one of the things that we will cover when we are discussing your situation specifically. Now let's dive into the enrollment periods. The initial enrollment period, IEP, is a 7-month enrollment period. It begins 3 months before beneficiaries have their first entitlement to Part A and B, their birth month, which is month 4, and 3 months after. If you miss this initial enrollment period, then now you're relegated to wait for open enrollment, which usually starts mid-October every year. The annual election period, AEP, for 2021 is October 15th through December 7th, 2021. Once you make your selection, you will be locked in for the year. The following enrollment period is Medicare Open Enrollment, MAOEP, January 1st through March 31st. This is where if you have enrolled into a MA plan, you can switch into another MA plan or back to original Medicare. And then the last enrollment period is the SEP, the Special Enrollment Period. It's usually granted when you have a qualifying event. What does that mean? Currently, I'm working with a variety of clients that are transitioning from their employer plan. And whenever that plan stops, then that gives you a special election to enroll onto Medicare. If you lose coverage, is also another special election period. So there are various criteria to qualify into a special enrollment period. Like I said, you have 2 choices once you are eligible for Medicare, original Medicare. You have Med Supps and Part Cs. Today's discussion, we are going to discuss Med Supps. What's important about a Med Supp? Well, they're privately sold by private insurance companies. They're designed to cover the gaps in Medicare Parts A and B. Sometimes they're also referred to as Medigap. We have 10 standardized plans that allow for an easy comparison. Massachusetts, Minnesota, and Wisconsin have different plan designs, but they're also regulated by the state and federal agencies. Here is a slide that basically goes over the standardized plans. I like to keep it simple when I'm having that conversation with folks. What's important is we always typically look at the high-end plans because most people want to make sure that their premium is the only thing that they have to worry about. And so for that, we typically look at Plan F and Plan G. And we will cover specifically, but again, we'll circle back to this slide, specifically when I'm having that one-on-one with you. Medigap plans after January 1st of 2020. We have Plan G with a high deductible that became available. The out-of-pocket limits, $2,370. Here's an example of a 65-year-old female. We're using the zip code again in Newport Beach. And we're looking at the difference in cost from the Plan G and the high deductible Plan G. I'm referencing United Healthcare. That rate, given the age and the zip code, is pricing at $152.56. And Plan G, the high deductible, is not available with United. It is available with Mutual of Omaha, and it's pricing $48.26. Here's my point and the difference between two. I know most folks out there want to save, but in the long run, I always say it's going to cost you more if you go with the bottom of the barrel plan, because typically we don't have that, that idea of what's going to happen with regards to our health, right? If we had that crystal ball, we'd all go for the high-end plan when we need it, and when we didn't, we'd all be on that high deductible plan. But unfortunately, that's not how life happens. I will say personally, it's important that you have at least a mid-level plan so that when things do change, if they change, you have a plan that is going to cover those costs. A high deductible Plan G, again, you do need to have Plan A and B in place. Medicare A and B pay the first 80%. The remainder is paid by Plan G. So in this case, you have to pay the first $2,370 before the plan covers anything beyond that. For example, doctor visit, Medicare approved amount $100. Medicare pays 80%, leaving that 20%, $20 as an example, which is basically applied to the deductible. The member is hospitalized and the member pays the hospitalization minus that deductible, $1,484, which then again, it's applied back to that $2,370. Again, not every year you're going to have a hospitalization, but it's really important that you have a plan that is going to stay ahead with your needs as they increase. Medicare supplemental plans, Plan F and Plan G, are also offered as high deductible plans by some insurance companies in some states, like in the case of Mutual of Omaha. But we also have plans K and L. After you meet that out-of-pocket yearly, your Part B deductible and the Medigap plan pays 100% of the remaining services. Plan N pays 100% of the Part B coinsurance, except for a copayment up to the $20 for some office visits and up to $50 copay for emergency room visits that typically do not result in an inpatient admission. Again, this is a lot of information, folks. What I'd like to always reiterate is when I meet with you, I'm going to keep it simple, relevant to how it applies to you. I don't lead by products. I have to make sure that I see what your situation to be able to make the adequate recommendation. Medicare supplemental plans, why is it important? Well, you have the secondary payer to Medicare that pays after that Medicare pays that 80%. You also have the guaranteed renewable. What does that mean? It means that the insurance companies cannot be canceled as long as the client pays the premium. The freedom to see any provider facility that accepts Medicare, because 95% of all physicians and about 98% of all facilities, this is really important. Clients can enroll anytime. You have the open enrollment, the guaranteed issue, and then you have the folks that are underwritten because they are outside of that SEP, the special election. Here's what's important. In your first year when you are eligible for Medicare, that is the year that you have guaranteed issue. Why is that important? That is important because if you're dealing with a chronic underlying condition, you don't have to worry of not being approved because you are within that initial enrollment period. It's very important. If you are outside of that, then now you are relegated to the underwriting questions. Clients must purchase separate Part D if they want RX coverage. So aside from the Med Supp, which is going to address the medical portion, we also have to add the Part D. It's also referred as PDP. And again, we're going to look at what is going to be a better fit given the medications that you are taking. So in our initial meeting, I'm normally asking for a variety of things. If you have a list of medications, bring that along. If you have a list of the doctors that you see, bring that along. If you don't have any doctors, that's also another opportunity that I take to be able to help you find a doctor through the Hoag medical centers in Orange County so that you're able to have, the level of care that you're aiming to have. Also, Medicare supplemental plans. Clients pay a premium, right? Premiums are usually, they usually change annually. But I will say that, the premium is relatively constant and you don't see the big spikes. The better coverage, the higher the premium. For instance, Plan F will have the highest premium. Plan K, if available, is generally the lowest premium. And again, this is very important. It'll be part of the discussion that we'll have when we're going over your situation. Why are supplemental plans better? Well, let's go over this. You're fully insured. You have guaranteed renewable coverage. The annual rate increase tends to stay reasonable, depending on the provider. Any provider or facility that accepts Medicare is available not just in California, but nationwide. You have unrestricted enrollment. You don't have any underwriting, and if you do, then we'll go over that. And you can opt into a separate Part D for your prescriptions, and it is federally and state regulated. Let's look at some case studies. Here we have Matt, who lives in Seattle, Washington. He's 68, retiring from his job. He's dealing with a chronic condition that has him visiting his doctor on a monthly basis. He's being advised that essentially he's going to need specialized surgery in the future. His doctor recommended that he go to Mayo Clinic to have this done. So in lieu of that, got him signed up for an Aetna Plan F. It is a rated A carrier with stable rate history. It also allows him to use the Medicare benefits at Mayo Clinic if that is, needed. And Aetna has also, is also a group insurance carrier. It is what he had when he was working, so it made it easier for him to transition because it was a carrier that he was already familiar with. Here we have Kurt. He lives in Nashville, Tennessee, 63 years of age, qualifying for Medicare due to a disability. This is very important. In California, and in most states, you are able to qualify for Medicare if you have a disability. He's being treated for pain management medication and regular visits to the doctor. He fears he will need the help of a wheelchair in the future to stay independent. He may need to move to an assisted living facility. He lives on a fixed income and his, along with his Social Security and 401k, so it's very important to not come across any surprises. So what we did is we signed him up on Mutual of Omaha, Supplemental Plan F. The rates are the same as someone who's 65 in that state, and they typically average 2.1% increases since 2013. He likes that his monthly healthcare costs are fixed and found an affordable Part D plan to help pay for his meds through mail order. This is very important because, again, his premium times 12 is all he has to worry about. He doesn't have any coinsurance, no deductibles, no surprises. Here we have Jennie. She lives in Newport Beach, California. She's 65 years old, has a lung disorder, sees specialists in Orange County through Hoag, and in LA County at UCLA Medical Center. Her doctors do not accept HMOs. She wants the freedom to access doctors without a referral. So what I did is I signed her up to the AARP United Healthcare Plan F. We added an affordable Part D, for her medications via mail order. She likes knowing that her monthly costs are fixed and she's not going to have any bills for copays or coinsurance. She travels to various states And so it's important because she's able to access doctors outside of California without having to, need a referral. So in short, think of a Medicare Supp plan when a client doesn't want to pay copays or coinsurance or deductibles. Also, when a client doesn't like the idea of a network. Client cannot afford a surprise of $1,500 and beyond. Very important. I also want to reference a short list of carriers through my agency. I am an independent broker, and I do have contracts with most top carriers: United Healthcare, SCAN, Blue Shield of California, Anthem Blue Cross, Cigna, HealthNet, Mutual of Omaha, Humana, to name a few. So the next step is setting up an appointment. I hope that I was able to communicate in short some valuable information. You can freely contact me at my Newport Beach office, 949-769-7009, or you can email me directly. I do check emails between 4 and 6 in the morning, or 8 and 9 p.m. at night every day, or you can text me. Text is the easiest way to contact me. I will respond the quickest. I look forward to hearing from each one of you that attended today, and I want to thank you again for taking the time this evening to attend this webinar. Here is my contact information. Like I said, I only see clients by appointment. I do not do walk-ins, so it's very important that you contact either of my offices in one of two ways. I am COVID compliant. I do temperature checks, mask required. I do Zoom meetings, so if that is what works for you, we'll make that happen. And I will never say no to in-person meetings. I do cover Orange County, LA, San Bernardino, and Riverside. Again, by appointment only. That is my website. Please feel free to go online and drop me a quick note. Would love to be able to help you in the near future. Now we're going to look at some questions. Someone said, you mentioned that you can switch from an MA to original Medicare during MA OEP if you are on an MA. Can you switch the other way? Great question. Perfect. One second. So yes, we will look at what your situation is. There are some scenarios that I did not mention because I wanted to keep the conversation relevant to Supp plans. There are folks that are eligible for Medi-Cal, and if you are in that scenario, it gives you a special election all year round. So there are other things that I will be able to ask to find other special elections that will allow you to switch. The other thing that's important is if you have a chronic condition like diabetes, a lung disorder, a heart condition, these are chronic conditions, and as long as we look at a chronic plan, a special needs plan as it's referred under Medicare, that also gives you the flexibility to switch anytime throughout the year. The other question that I got was Plan G. Is it now Plan F, since Plan F was the only one that was available prior to 2020? Great question. So Plan G was introduced because Plan F is only available for those folks that had their birth date prior to January 1st of 2020. So for instance, right now I'm helping a couple that the husband is retiring. He is 68. And yes, he is past 65, but he will be in his initial enrollment period because he has been under the employer plan. And in lieu of that, he'll be eligible for Plan F because obviously he did turn 65 prior to January 1, 2020. So in that scenario, Plan F is available. So Plan F has not gone away. It is still available as long as that person's birth date was prior to January 1st of 2020. Plan G is the mirror plan of Plan F. The only difference between G and F is that Plan G has a $203 deductible if you are confined in the hospital. Everything else is covered at 100%. With that, I hope I've been able to answer everyone's questions. And again, I encourage you to connect with me. I am on pretty much every social media platform: Facebook, LinkedIn, Instagram, and Twitter. I look forward to hearing from you. Thank you.